All right, yo, we're back for another episode. We are in episode number 3 with the Pivot Podcast. I am again joined with my amazing co-host, Mr. Dan Jansen. How are you, sir?
Almost forgot about your tagline for a second. I almost forgot, and then you covered it right back on the horse. I'm doing awesome. How are you, Trace?
I'm good. Excited
Awesome.
for another episode, and I'm always thrilled to connect with you and being able to chat and have some great conversations. So,
100%.
Excited.
In this episode, we got the power of trading plan, of having a trading plan, how to set goals and develop a strategy. So, Tracy, why should we even cover this? Why is having a trading plan important when trading?
Wow, such a great question. And where do you start? First of all, what is a trading plan, right? So a trading plan, here's the thing. It doesn't matter what you do, whether you are in a job working for somebody or whether you're an entrepreneur. If you are working for a job, they have what's called a job description. And that job description kind of lays out what your duties and expectations and what have you are. They also have policies and procedures and code of conduct and all that kind of thing that tell you what the boundaries and parameters are of your job. And if you move outside of those boundaries or the parameters, then guess what? You get reprimanded, possibly get a letter in your file, or you get fired. If you're an entrepreneur, then you need what's called a business plan. And that business plan kind of does the same thing as your job description, your code of conduct, and your all that kind of stuff. But it puts things together that create a boundary of how you are expecting to operate your business. It gives you an ability to determine whether or not you're on track or whether you're heading in the right direction, that kind of thing. Trading is no different. If you want to treat this like a business and treat it in a manner that you are looking for success and it's not quote unquote a hobby, then a trading plan is something that will do the same thing. It will set up some boundaries and parameters of how you will operate your trading business from day to day. Would that be a good explanation, Dan? What do you think?
Yeah, I don't know if you remember the episode we did last season. I want to say probably like June, July, about is trading stocks gambling?
Mm-hmm.
And I think it kind of relates to that because people are in the markets for all different reasons. I think, right? So some people are doing it full time. Some people want to do it full time, and some people it's extra income or they're fascinated by it and it's just a hobby to some extent. I would say I don't honestly care if you're doing it full time, you want to do it full time, or if it's a hobby for you or extra income for you. It is something to take seriously. It's a real financial either blessing or stress that could be added to somebody's life. Mm-hmm. Honestly, if you're out there gambling and you just want to go in every now and then and buy GameStop when people talk about it on the news, by all means, do it if that's your plan. You're just doing it for more of a gamble than to do it professionally or consistently. But if you want to be consistent trading, like you said, it's like a business. I would 100% advocate treat it as a business. Right? Even if it's a side hustle, side income, extra money to go on vacation, well, you still have a goal. You still have a why as to, okay, I want to make this money because of this reason. Or I want to be able to do this, X, Y, Z. Having the trading plan, again, it doesn't mean that you're the greatest trader in the world just because you have a trading plan. Your trading plan could be garbage, but you're probably still at least ahead of 80% of the people that are just willy-nilly into the market, right? And you have a better shot of succeeding. And once you have a defined list, a defined strategy of I look for this, I risk this much, I know what I'm risking, I know what my plan is, I know when I'm done trading for the day, that adds a lot to the path of consistency. And I think that's extremely important where somebody coming in, they're just like, oh, Tesla, it's 8,000 shares. And it goes up a penny or down a penny, they're freaking out one way or the other, and it's very tough to be consistent. So having a defined set of rules that you follow, same thing a business would. How much do you spend on advertising? I could make. We were talking about what was it, Carvana in the early rooms today. Carvana, they're showing that they make $512 million annually. So if somebody looks at that, they go, great. But then we don't see they're spending $1.2 billion to get to that $500,000 to the 500 million in sales. You have to have some kind of plan to say, now we could tweak this. We could change this. We know we're spending way too much money. And if you don't know, it's very tough to, I mean, you could win. It feels great. And then the next couple trades you lose, and now you lost not only what you gained, but way more than you probably intended to start with. So you have to have some kind of guideline.
I agree. And a question for you. If you were
Challenge
to
accepted.
if you were to take a job for somebody and you showed up to the job on the first day and you had absolutely no idea what you were supposed to do, how would that make you feel?
That's a good one, because I would have two thoughts. One, how I feel about myself, and one, how I feel about the company I'm working for, to be honest.
Mm-hmm.
So one, I'd be
Right.
like, I just need the job because I need a job. Right. And I'm like, okay, I want to do something and progress and have some kind of goals for me. Others might take it as, all right, I guess I could kind of do whatever I want here in this company. But two, it's like, how well is the training? Like, how, my guess is the first day I show up to a company and they don't have any plans for me or training or anything, my first thought would be turnover rate is going to be extremely high for any new people that they bring in because they're not being trained. And I better start continuing to look for a job. I wouldn't feel too safe there.
Yeah. Well, I think that for a lot of that, I mean, that's all valid. And I think that a lot of people will feel that for sure. But I think in addition to that, you'd also feel lost and not really knowing what to do next. Should you start to look for something to do on your own? Should you ask somebody? Should you, like, you'd be lost. There would be no real direction. And the minute you put that plan in place, it eliminates that anxiety. It eliminates that discomfort of really not knowing what you're supposed to be doing day in and day out. Having that plan in place is kind of that safety net per se of what you should be doing. And again, as you mentioned before, it gives you some guidelines to determine whether or not you're on track or whether you're not on track. So that's why I think it's really important. And I think it's one way of holding you accountable when nobody else is there to hold you accountable. You actually have something written out that is a plan, and you can look at it. And if you're honest with yourself, you can say, yeah, I'm following my plan, or no, I'm not following my plan. And there's some accountability that's there. And depending on how you're built, you can use that accountability to adjust your behavior. Or if you're built in a way where you just ignore it, it's like, whatever, but that's a lack of accountability, and there's not much I can do to help you there. So
you can't hold yourself accountable if there's nothing, if you didn't have rules in the first place.
Exactly. Absolutely. So I guess we know the importance of having a trading plan. Let's talk a little bit about what you might put in a trading plan. So what do you think is important to have in your trading plan?
Good question. So the first thing for me would be the risk. And I think when I was trading and kind of piecing everything together and different setups together and trying to make everything coherent, the one thing that really nobody talks about is the risk. And when I got to real life trading, I'm like, wait a minute. So you're telling me I know how much I could possibly lose on a trade? And if I'm comfortable with that amount, then I could, like, that makes trading a lot easier. So having a defined risk, and then also a rule to when you're able to, so in real life trading, if anybody's not in the community listens to the podcast, that's what we would say is an R. So throughout the season, we talk about R's. That's what we refer to, your unit of risk. But for me, I have plans in there as well for not how much. So not only how much my R is, but at what point do I get to increase those R's, right? Mm-hmm. Because I want progression. Same thing. You go to work for a year, you do a great job. You're gonna want a raise, right? You're gonna want to talk to the manager or owner of the company and say, "Listen, I'm busting it over here. I need a raise." Same type thing. So you want to reward yourself. You want to grow. The more that you trade the markets, the better that you get. And now trading a bigger R makes more sense, right? Because you're used to following the process. You're used to, okay, the last 6 to 7 months, I was consistently trading. I was positive. Let's see if I could increase that a little bit. And then having defined rules to determine the risk for me, I think is the first place that I would start out having. And then also in there would be the why to trade in my actual plan, because every time I look at that plan, I want to remind myself, why am I looking at green and red candles every single day? Why is this important to me? And on just reiterating the whys for me helps me stay on course and helps me to get focused on the trade. And it also helps me hold myself accountable, because I know every time I'm just ignoring it or gambling or just doing whatever, that's most likely taking me a step further from the reason why I'm doing this in the first place.
Right. No, I love it. I love it. And I want to just say something regarding risk a little bit more. And for all of those individuals out there that are listening right now that may think, risk, whatever, I don't need to define it, or I don't need to look at it. Or, you know what, nobody else talks about risk, so why should we talk about risk? Well, I can tell you that outside of trading, every other company on the planet, every other job that you've ever been in talks about risk. They call it safety, or they call it occupational health and safety. Don't know what it is in some countries, but that's what it is. It's called safety. So, and most companies, most really good companies, put a huge focus on safety. In fact, they put rewards, they put benchmarks and goals, and they get deductions for certain insurances and what have you when they meet those benchmarks, because they're doing well in meeting their safety requirements and their safety goals. So let's just put that into a little bit of perspective. The risk management is called something a little different in trading, but it's the same thing. It's the safety aspect of trading, that part of the career. So let's just put that into perspective. That's all I wanted to do and touch on that. But yes, I completely agree. So those are the two things that you think are the most important for you. Is there anything else that you have in your trading plan, or is that?
Yeah, there's a lot of things. I would say that's to the key focus. It sounds very basic.
Yep.
But I think it's so basic that it's probably overlooked way more than it should be,
right,
in trading. And then the other thing is then we start getting down to, in my personal trading plan, it's, for me, a strategy is a strategy. I think that they come up with good rules for you to get into a trade and to get out of a trade, and how to define your risk. Even candle setups, like based on what kind of candles are you looking for, stuff like that. To me, location is everything, because I could be doing great setups and get the perfect candles in a completely wrong location, and it makes it very, very difficult to really have a good win ratio on those certain setups. So for me, I'm looking for certain locations as to, is there a double top? Is there really good resistance on a longer time frame? Is there some kind of support I could base my trades off of? I have certain rules that apply to location, and then after that, it's kind of like a flow chart. Like, great, now we're in the location. What do we do from here? So it's kind of a step-by-step for me, what to look for on trades, and try to be consistent as possible based on what I've back traded.
No, that's perfect. That's cool. Now, I think that it's really important for traders to keep that part of the trading plan very simple and very small when they're starting out. So if you're a new trader, the best thing that you can do for yourself right now is to focus on kind of one strategy and get really, really good at it, instead of having a trading plan that lays out a million different strategies and then you're just chasing your tail every time and you're too busy. I've used this analogy before, but it's just like driving a car. When you first started driving your car and you were learning, you're very acutely aware of where the gas, where the brake is, where the gear shifts are, where the mirrors are, where everything is located. You're very, very conscious of that. And as you develop your skill, that awareness diminishes. And at some point, you get to a point where there's going to be times where you drive home from the grocery store and you don't even remember how you got home, because it's so automatic that you do it, that it's become like that. And trading's no different. I think that when you start out with a simple, easy strategy, you need to work on the process, not on, like I said, trying to find as many opportunities as you possibly can. So that, keep it simple. And a trading plan, a good quality trading plan, is not going to it's not going to make you feel overwhelmed. It's going to be very simple, very straightforward, very easy to follow, and give you successes on a daily basis. And I think that's important. I have a couple other components to my trading plan that I feel are important as well. And one of them is commitment. And what I mean by that is, when I have a trading plan that I've put in place, I put a time frame of how long I want to commit to that trading plan. And the reason that I do that is because the markets are not the same every day. It changes from day to day to day and day. And trading is a numbers game, which means that you have to have a fairly decent size of trades to kind of balance it out, because there's going to be days you lose, days that you win, and the sample that you have of those trading days need to be enough that you give your trading plan an opportunity, your trading system, whatever it is that you're using, give it an opportunity to actually succeed. And some of the mistakes that a lot of traders make is when they have a setup that they're looking for and they define it in their trading plan. The first time they play it, if it wins, great, they'll play it again. But if it loses, they start changing their trading plan. So putting in that commitment and saying, I'm not going to alter my plan. I've practiced it. I've determined that this is what I want to do. I'm committed to it. I'm going to keep that commitment until a specific date. And it's usually 1 to 3 months down the road before I'm allowed to try a different strategy, or I'm allowed to change up my trading plan. And I think that that's important to recognize and commit to, because like I said, there's a big mistake is when traders start to alter everything because they don't like to lose. And instead of dealing with the losses and accepting the losses and recognizing that it's part of trading, they try to ignore it. They try to avoid losses altogether. And I don't think that's possible. So that's that part. And then the other part is management, trade management. So once you get into a trade, I think it's really important to have clear plan of how you're going to exit the trade. Because I see a lot of traders, once again, that once you're in the trade, it's like, oh no, what do I do? I do, this is happening. And it's not just about where do I exit the trade when I'm winning. That can be easy sometimes not, because you can get greed that kicks in and you want to hold it a little bit longer than you should. But also, what does it look like if it's going to fail? And you have to look at both of those perspectives and have some sort of a plan. And I'm not talking about having a specific, this is where I'm putting my stop at this particular level, or this is where I'm moving my stop to at this price. It's not that accurate. It's more of, how am I going to manage my stop? Am I using a pivot? So when the pivots come in, I'm moving my stop. Am I moving my stop based on time? So after a specific amount of time goes by, I'm allowed to move my stop. Am I allowed to move my stop after a certain event happens? Whatever it might be, just define that so that you know what to do. And again, that plan allows you, when that situation comes and the emotions start to kick in, you know what to do. And that is, I think, a huge lifesaver for a lot of traders. What are your thoughts on that?
Yeah, I agree. I think having a plan is a good element to emotion reduction. So I think there's always some element of emotion into a trade, because unless you don't have a pulse and you're a robot, I don't think you could clearly get away from it all the time. But the more planning a company does, the more successful they tend to be, because they've already tried to look, and there's always an outside source or something crazy that happens. Okay, in a one-off solution, try to get out of a situation the best you could and just move on. But 9 times out of 10, if you could plan and really understand, like, all right, this could happen, and looking at all the risks involved of a certain setup that you might take. News happens, earnings happen. What happens when earnings come up? Do I even take a trade before earnings? Mm-hmm. I think all of that's important, because the more you are able to take that out, the less emotion that you have, the less that your emotion is going to be caused, especially on the fear side of things, when you're just kind of flying in the wind, and you're like, mm-hmm. Man, I've never seen this situation before. What do I do? Right? And now you're forced to react. Mm-hmm. And maybe the reaction is a good one, or maybe it's a bad one. But the idea is not to be good or bad at reacting. The idea is to just follow that plan that you've created. The other thing I love about plans is when people have a certain plan written out as clearly as they possibly could. Here's my risk. This is my setups I'm looking for. This is my punishments if I don't follow my plan. This is my rewards if I do follow the plan. This is my goals. The more you have in detail and you're struggling as a trader, the easier it is to go to a mentor, go to a coach, and say, listen, I need to improve my trading. Even if you're having a good month and you're like, hey, I'm up 5 hours this month, 10 hours this month, or consistently on average, I'm up a certain amount of hours. I want to improve and get better. How do I do that? If you have a defined plan that you've been working on and you're going through, this is my setup, this is my process, it's a lot easier for somebody on the outside to take a look at it and say, why don't we tweak this? Why don't we change this one element? Why don't we, instead of catching breakouts, we just work on taking pullbacks?
Or why were you breaking your rules?
Why were you breaking the rules? Exactly.
Yeah.
And it's a lot easier for somebody to make that tweak than saying, okay, well, let's start from the beginning and what are you doing and why are you doing it? And you're trying to explain your rules and some of it might, maybe you miss some, and now you're trying to like catch up and just make it work. Where if you go, listen, this is my process, this is my little flow chart of why I do things when I do things, then it's easier to tweak. And that's able to have maybe somebody with more experience, somebody that's been doing it for a longer time, just even a fresh set of eyes looking at something going, this seems to be what you're taking. What if we try to work on something else? A slight little tweak oftentimes could be something that could really catapult your trading.
Yeah, I completely agree. That's a really good point. And you brought up something else because you talked about risk or reward and punishments. Let's talk a little bit about that as well. So what exactly does that mean to you? Reward and punishment in a trading plan. Define that for me.
Yeah. Basically, they come into, do you follow your plan or do you not follow your plan?
Mm-hmm.
You could create as many trading plans as you want, and if the time comes that bell rings and you just do whatever you want anyway, why do you waste your time with the plan, right?
Mm-hmm.
But there is that certain aspect where you're going to want to fight and change things and do certain things because the world is ending because of a Fed rate hike, and now your plan is all messed up and you have to react real quickly. If you're able to follow your plan, right, whether the plan is good or not, that's something that could be tweaked. Myself, yourself, Tracy, we can't sit with somebody, we can't coach somebody and say, okay, we have the plan, but you're not following it.
Mm-hmm.
Like, over and over again. I don't know what else you want me to do. Like I'm trying to help, but I can't be there clicking the buttons for you, right? It's something that you have to take ownership as an individual, as a trader, and be accountable, right?
Mm-hmm.
So the same thing though, I mean, if you have some kind of punishment, I know Jeremy is creative as possible, coming up with different things to be like, hey, listen, don't break your plan or this. And a lot of times he's got really great punishments in there.
Mm-hmm.
The benefit to it, and I think this is huge too, it doesn't have to be, again, you're the positive side to tell, the reward doesn't have to be huge, right? But give yourself, even on a trading basis, if you have a good month or a good week, have something in your plan for, my main goal is I want to quit my job, but for now, if I can make so much money, I want to set aside 10% of it to go on a cruise somewhere. Mm-hmm. Maybe not a cruise, COVID, whatever. Somewhere else, right? Somewhere else. But if you're able to go out to dinner with somebody, spend more time with somebody, do something little, that puts a lot of value to what you're actually doing. Because again, it's the same thing. You go to the casino, you don't put real money on the roulette table. You have to go get fake chips first. It takes out the meaning of what you're actually doing. If you have to put $100 down every single time the wheel spun, you'd probably be gambling a lot less, right? And it's the same thing with trading. You put your money digitally into a broker, then you're digitally trading $30,000, $40,000 every single time you take a trade, $50,000, $100,000. If you go back and add up, probably for most traders in the chat, if you guys are adding up all the money that you actually tossed around last year trading, you'd be like, wow, I can't believe I was controlling that much money, right? And we don't feel it. But if you're able to say, you know what, I had a good week. My plan says I'm allowed to take out X amount of dollars, and now I'm going to be able to go actually do something with it. Now that trading that you worked all week for is actually a little bit more tangible, and that's something that you when you sit down, you're reminded of that. You know that, and that also helps keep you a little bit more accountable to not want to break the rules.
Mm-hmm. Yeah, for sure. And let's just define something as well. When you break a rule, it's not whether you win or lose that defines whether you break that rule. If you break a rule, it doesn't matter. If you win or whether you lose, you still need to be held accountable, because you can break a rule and still come out ahead. You can break a rule and come out with a loss. And the problem with coming out as a winner after you break a rule is that reinforces bad habits. That leads to continued rule breaking, which eventually down the road will not pay off in the end. So I am curious what your thoughts are about why people might break their rules. What do you think it is?
Lack of confidence, number one. Lack of
Confidence in what?
confidence in themselves as a trader.
In themselves as a trader? Okay.
I would say 9 times out of 10 that rule break is because well, you know what? I would say confidence, not lack of. Some hands moving your stop too quickly that doesn't follow your plan. That's probably more or less that you don't have confidence that you're able to take the right setup. Right? You can't believe that you're winning and you're just taking profits too quickly, moving stops too quickly, doing things that they're not in your plan. And then on the other note, just you feel like you're just reading the market great that day. The bell rings, should be an absolute bullish day, and your plan says to wait for a setup, and you just can't wait because you're just overconfident that you're nailing this market today and you're going to make so much money. So I would say probably confidence in general. But I think the other thing too, the other thing is most people that do break rules haven't really put the time in, the longevity into following that plan. Right? It's easier. The longer you stick to that plan, the easier it becomes to stick to the plan because you start to see progression. And the more you see progression, the more, if it's day one of me creating a plan, I have zero confidence that this plan works. I've never tried it before, maybe back traded. I just set this thing up. I'm trying it. It's pretty tough to stick to it. Next day becomes a little bit easier. And then after a month, you're like, okay, you know what? I was up a couple R's. Maybe it's where you want to be. Maybe it's not where you want it to be, but I was up. The next month, you're getting a little bit more information that you are able to document and say, I'm progressing toward my goal. Whether I get there in one trade or whether I get there in over the course of the next 10 years, I know I'm heading in the right direction. And the more that you're able to see the progression and see it day after day, week after week, month after month, you start to understand the power of not breaking a trading plan.
Yeah, I agree. I think that the biggest culprit is lack of trust in your actual trading plan. You haven't practiced it enough. You don't know it well enough. And that leads to a lack of confidence in that trading plan and ultimately in yourself because you can't follow it. So there's that. But I think one other thing that could be wrong as well is you haven't practiced enough, but maybe the trading plan is not the right one for you. Maybe you're using a strategy that really isn't suited to your personality. So if you're using a scalping strategy, for instance, but you're not really a scalper, and I mean that from a personality perspective, then it's not going to work for you. You're going to consistently break your rules because you don't work that way. You don't think that way. And on the other hand, if you are a quick thinker, one in and out, and you don't want to hold something, you're more of a scalper. That's the kind of personality that you have. And you're trying to carry trades all day long, you're going to constantly battle with that. And it's going to be a conflict. And I think that can also lead to some rule breaking ultimately.
Yeah, I would say not every trading plan is built for every person. There's no one blanket one. I mean, we could have, we're all trading the market, but you have a different trading plan than I have, right? We could both own delis and your specialty is hot food and mine's just making sandwiches. The second I try to make hot food, my clientele just goes down. And they're like, nah, this food is horrible. What are we here for? But we could both be successful following our own strategy, our own specialty, what relates to us the best.
Yeah. Which is why I think it's really important that, if you get a trading plan from somebody, because people have asked me for my trading plan, I don't give it out anymore because it's tailored to me. And I find that a lot of people don't take the time to tailor it to themselves. And it's not going to work. It's tailored specifically for me, right down to the affirmations that I've written inside of it. It's for me. And so I would highly recommend that if you do get any kind of a generic type of a trade plan, take the time to customize it. And you really need to know who you are. And on top of that, I have two types of trading plans, just an FYI. I have my regular trading plan, but I also have a daily trading plan. And that is something completely different that maybe some point I'll show you guys what that is. But it's something I do every single day. And there's certain things that I need to log and and discuss and track and what have you. And that's different than a trade journal. This is actually a trading plan. It's a plan that I do before the pre-market that kind of sets me up for what I'm going to be doing for the rest of the day. So yeah. Anyway, looks like we are out of time once again.
I don't know how we always run out of time, but always good to see you, Tracy. And thanks for everybody being live here in the chat with us as we record this. And for you guys that were not able to make it, but listening to a later date, we do appreciate you guys. Make sure you guys also check out the links. I'm not sure when this one comes out, but we do have, well, especially for the people live in the chat room, free week is next week, the 23rd to the end of the week. So make sure you guys pass the word out, send the links out, and get other people's mind involved in the markets, and maybe they can look at it in a perspective that they might not have thought it was before. So all you guys, we appreciate you, and we'll see you on another episode of the Real Life Trading Pivot Podcast. Take it easy, guys.